14%. That's the projected jump in home sales for 2026, according to the National Association of Realtors chief economist. While everyone's been sitting on the sidelines waiting for the market to crash, something completely different is happening on the East Coast right now. 3 cities in particular are about to experience a real estate surge that could make early investors very, very wealthy. And if you've been thinking about relocating, the window of opportunity is closing faster than you think. Stay with me, because by the end of this video, you'll know exactly where the smart money is moving in 2026. What's up, everyone, and welcome back to the channel. If you're new here, we break down real estate markets, investment opportunities, and financial trends without the fluff. Just data, analysis, and actionable insights. Today, we're diving deep into Lawrence Yun's latest forecast from the National Association of Realtors. And here's what's fascinating. After 3 consecutive years of flat home sales, 2026 is shaping up to be the year the market finally breaks free. But here's the catch. Not all markets are created equal. While the national outlook is optimistic, there are specific East Coast markets that are positioned for explosive growth. We're talking about cities with the perfect storm of job growth, population influx, and still affordable inventory. In this video, we'll break down 3 powerhouse markets, analyze why they're about to boom, examine the risks you need to know about, and most importantly, give you the information you need to make smart decisions in 2026. Let's get into it. First, let's zoom out and look at the national picture, because understanding the macro trends will help you see why these specific markets are so special. Lawrence Yun, the chief economist at NAR, is projecting some major shifts for 2026. Existing home sales are expected to jump 14%. That's huge after years of stagnation. Think about what that means. Millions more transactions, more competition, and rising prices in hot markets. Home prices nationwide are forecast to rise about 4%, bringing the national median from around $385,000 to approximately $400,000. That might not sound dramatic, but in high-growth markets, we're talking double-digit appreciation. Mortgage rates are projected to decline towards 6%, down from the 6.7% average we saw in 2025. That's not the 3% rates we had a few years ago, but it's enough to bring buyers off the sidelines. Job growth remains steady, with roughly 1.3 million new jobs expected. More jobs mean more people needing homes. Now, here's what Yun said that really caught my attention. Higher inventory, modest improvements in affordability, and more accommodating monetary policy from the Federal Reserve will help more Americans buy their next home. Translation? The freeze is thawing, the market is opening up, and certain cities are positioned to capture a disproportionate share of that growth. So, which East Coast markets made the NAR's top 10 housing hotspots for 2026? 3 cities stand out as absolute powerhouses. Let's break them down one by one. Market number 1, Raleigh, North Carolina, the Unstoppable Triangle. Raleigh, or as locals call it, the Triangle area, including Durham and Chapel Hill, is the definition of a growth machine. And here's why this market is special. The Triangle is one of the fastest-growing metros in the entire United States. And these aren't just any people moving in. We're talking high-wage earners working in tech, pharmaceuticals, and research. According to Dorify MLS data, by the end of November 2025, the median sales price in the Triangle hit $415,000. Homes are selling at 99% of asking price, staying on the market for a median of just 29 days. That's a hot market. But here's what most people miss. The Triangle had 4 months of inventory supply by late 2025, which means it's entering a balanced market, not overheated, not dead. That's the sweet spot for sustainable growth. Trent Olson from Town Bank Mortgage put it perfectly. Everyone is still trying to come to the Triangle area. Job creation and wage growth continue to attract thousands of new residents, and housing inventory simply cannot keep up. If rates drop even slightly more in 2026, expect bidding wars to return. Properties priced right are already seeing multiple offers. This is a market where you want to be early, not late. Market number 2, Charlotte, North Carolina, the financial hub. Charlotte is the second largest banking center in the United States behind only New York City. That alone tells you everything about its economic foundation. Why Charlotte is booming: major corporate headquarters presence, strong job market in finance, energy, and tech, more affordable than comparable metros, excellent infrastructure and airport connectivity. NAR selected Charlotte as a 2026 hotspot because it demonstrates strong demand potential, improving affordability metrics, and critically, a housing stock that matches buyer budgets. This is a city where $300,000 to $400,000 can still get you quality housing in desirable areas. Compare that to cities like Boston or Washington, D.C., and you see why people are flocking here. Market number 3, Richmond, Virginia, the hidden gem. Richmond might surprise you, but it shouldn't. This market has been quietly building momentum. Strategic location between D.C. and the Research Triangle, growing government contract and tech sectors, historic charm meeting modern development. Significantly more affordable than Northern Virginia, Richmond made the NAR Top 10 because it's hitting that perfect balance: economic growth, manageable prices, and increasing inventory that matches what buyers can actually afford. All three of these markets share something crucial. They're not just seeing population growth, they're seeing the right kind of population growth. High-earning professionals, young families, and remote workers who are choosing lifestyle and affordability over traditional expensive metros. Now, let's talk about what most people won't tell you: the risks and the reality check you need before making any moves. We're at a unique moment. Rates have come down from their peak, inventory is improving, but prices haven't exploded yet. This is the calm before the potential storm. Whether you're looking at $300,000 in Outer Triangle suburbs or $400,000 plus in prime Charlotte areas, there are options at different price points. Here's a stat from our mortgage expert. Home values have never declined over a 10-year time span nationally. These East Coast markets have even stronger fundamentals than the national average. As Olson warned, if you're waiting for rates to drop to 4% or prices to crash 20%, you're likely to wait forever. Markets don't work on wishes. They work on supply and demand. Builders are offering rate buydowns and incentives, which sounds great, but often means higher purchase prices. Those incentives aren't free money. They're baked into the home's price. While job growth looks solid, broader economic factors could impact any market. No one has a crystal ball. If you're selling, understand that homes bought in 2019 or 2020 saw artificial appreciation during the pandemic boom. The market is more rational now. Overpricing will leave your home sitting for 50+ days instead of 29. Don't try to time the market perfectly. If you're financially ready, the data suggests these three East Coast markets offer strong opportunities in 2026. But work with professionals who know local conditions. A seasoned real estate agent and a knowledgeable lender are worth their weight in gold. All right, so here's what I want to know. Are you considering moving to any of these East Coast markets? Are you already living in Raleigh, Charlotte, or Richmond and seeing these trends firsthand? Drop a comment below. I read every single one, and your local insights help everyone watching. If you found this analysis valuable, smash that like button. It tells YouTube to show this video to more people who need this information. And if you're serious about staying ahead of real estate trends, market analysis, and investment opportunities, hit that subscribe button and turn on notifications. We're dropping videos every week that give you the edge in this market. I've also put some helpful links in the description, including resources for finding real estate professionals in these markets if you're ready to take action. Here's my final take. 2026 could be a turning point year for real estate. After 3 years of everyone sitting on their hands, the market is finally moving again. But this isn't going to be a rising tide that lifts all boats equally. Markets like Raleigh, Charlotte, and Richmond have the fundamentals, the jobs, the population growth, the inventory at the right price points to outperform the national average. The question isn't whether these markets will grow. The question is, will you be positioned to benefit from that growth? Or will you be looking back a year from now, wishing you'd acted when the data was clear? Lawrence Yun called it the light flashing at the end of the tunnel. I think that light is brighter in these 3 cities than almost anywhere else in the country. That's it for today's video. Until next time, stay informed, stay strategic, and I'll see you in the next one.